Now this video is just for me. It's for nobody else. I need to talk about it uh, so that I can figure out how to best handle this. So this will be a two-part video, exploring, just brainstorming to figure out what I need to do. So I have been doing a dip and rip, but sometimes the dip and rip I have not set up properly enough to have these three primary things, which is entry, not adding to a loser, and stop loss. And the other part is the flip side is adding to a winner and exiting at the right moment. Those are the flavors of a proper trading. Now, the bag of tricks that I need to harness, I have been looking at this for a little bit, and there seems to be I need to have two of them. I need to have two bag of tricks in order for me to be satisfied with the day. I have been playing dip and rips, but dip and rips, when the day starts and when the stock moves, it moves in one direction or the other direction, and I have to wait. And that setup could take hours, and because I have to wait for hours, I tend to enter too early because what I'm looking for is a reversal. When I'm looking for a reversal and the stock is still trending either up or down, then I go into a deep drawdown at a point where the drawdown is so substantial that my emotions are triggered and I am easily shaken out. That's the scenario that I'm facing. The other part is, what could happen is that I would enter too late, but it will never recover. It'll just recover right below where I made the purchase, and at the end of the day it would slide down, and I would end up waiting the whole trading day, 7 hours of trading day, essentially going through the emotions of a loss. So now what I need to do is, what I'm missing out on is the initial move. The initial move is significant, it is fast, but it is complex. And I need to piece together reasons and the probability of how the stock is moving, so that it's not easy. It's very difficult. It's the unlikely scenario. So now this is the second setup that I'm exploring. I have to explore this second setup, and I'm talking to myself in order to figure out how to do this, so that I can bring out and make it conscious of the thoughts that I have in order to make this work. So for instance, when the stock market starts to open, the previous day's news and events has already taken an impact. For instance, Walmart this evening, after hours, stated that their guidance is lower because of several different factors, like higher gas prices and inflationary pressures. And so that is causing that, and also in order to maintain a higher level of inventory, they're doing something with that as well. So which could possibly mean that they're raising their prices, which means that people will buy less. So based on that news, the stock dropped about 10% after hours. Now that's one scenario. So tomorrow, this is a prime example of what's going to happen. The stock is going to open or before the opening, the pre-market price may climb back up from where it is right now. Uh, it is possible that's going to happen. And then once it opens, it can do infinite variety of things, because it could go down, it could go up, it could go sideways, or it could be somewhere in between, infinitely different manner of the way that the stock moves. Also, that's just one infinite. The second infinite is that it can go down and it can go up and it can go down. It can do some odd things. There's another infinite way of doing it, which is it'll go down and then it just starts skyrocketing at a certain level. That's another infinite way of infinite permutations of how the stock will move. Now, that would be what I call a slash open and breakout scenario, where the stock is going to open up and it's going to move into a certain direction. And because it has it is possible that the reaction from the pre-market may be subdued and there may be more accentuated movement that needs to occur in the direction of the adverse news, which means that the stock may have to drop further and throughout the trading day, which I've seen. I've performed a historical analysis of the last time Walmart gave it was actually an earnings report, which stated that it was bad news. And what happens is that it'll go down for about 3 days. After the third day, the fourth day, it'll start to climb back up, because the news seems to hit, and it takes about 3 to 4 days for the news to filter through. And that overreaction, generally what happens is that if there's significant news of such magnitude, there is an overreaction, and that overreaction ultimately, after about 3 or 4 days, the reasonableness of the stock returns, and that overreactions becomes adjusted, and that's what happens. So now what I need to do is to take advantage of this particular situation. That will be the third or fourth day that I need to consider. And the decline on the third day is far less than the first and second day. So what I need to do is figure out a scenario where I can, at the open tomorrow morning, figure out a way to substantiate the amount of money the amount of the risk that I have, and then place it in a direction which I believe will go, and then place a strict restriction on how the stock will move, and it'll impact my capital. The volatility that's involved also impacts the options price, which means that at the open, even though that has the maximum, probably the maximum amount of move occurs at the open, the option price equivalently will be significantly higher, because the stock's option is priced based on the volatility of the stock, and therefore and the night before, the day before, the volatility has been programmed into it, so that the following day the options price will significantly drop based on lesser volatility, because the earnings report has already occurred. So in order for me to really figure out, now that I have a large experience in losing a significant amount of money, and now knowing that I need to wrap around whatever I have with a system that will allow me to handle any situation, the best part is now I need to concentrate on the most highly probable scenario based on the entry selection and the direction. Now, if I can pinpoint to those two particular situations that I can wrap around with a system of trading so that I can handle any situation. So for this particular situation at the open, I am aware that the options price will be significantly higher. However, within that split second, when the prices becomes adjusted to the new day, that might be, maybe it's possible that it could go on for maybe 30 minutes. Within those 30 minutes, the significant impact of price adjustments in the options may be less, and therefore it may be stable from opening to the 30-minute period where one of the other guys said hello. This is a great place. Thank you. Okay, so now what I'm going to do, what I need to do, this is going to be, see, I need to make this work, and I have to explore this. I have to explore this in a significant manner. If I do not explore this in a significant manner and preoccupy the time that I have waiting for my dip and rip to occur, this will complement my trading. It essentially will allow me to, wait, really, at about 95% of the time, and 5% will be a situation where it just moves sideways. So, and then even if it's moved sideways, then I'll take a particular time and then I'll exit when certain situations occur. And therefore, I'm going to explore this. I don't know how I'm going to explore this. I suppose what I need to do is write up a plan to look into all the movements of that could possibly occur. And post-earnings information is a prime example of how stocks move at open, even if there isn't any earnings, because it generally reacts to the global news anyway. So what I consider news as something that is similar to earnings reports, and so the behavior will be similar, and initial reactions could cause the stock to move in an infinite variety of ways. And so what I look for, so now what I need to do is go back and start developing this new methodology for opening trend trading, opening trend breakout / I'll define it somehow. The next video will define how it works.